All right. So good morning, everyone. Again, we are 14th of April. It is Thursday. So for today, we will be looking at the yen pairs. We will be looking at gold. I'll do a quick review. We just had a lot of news last night or yesterday with the RBNZ. We went through in detail about that already. We do have the pound CPI number. I'll do a touch on that, and also the interest rates decision coming from the Bank of Canada. So quite a lot of things happened last night. We saw a lot of movements overnight and possibly leading into today as well. So I think that there might be a couple of trade ideas that we'll be having, especially if I can share that into the club platform. So speaking about a club platform, this is live for club members, but it is also recorded and uploaded onto YouTube later into the day. So if you are watching us on YouTube, please make sure to check your charts because it might have moved on from what we were talking about already. And also, if you're not already a club member, check out the links below. Join the club, jump onto this course live. We also have Tuesday and Thursday night sessions where we'll be going through trades in a shorter term, in a shorter, smaller time frame. And also, usually in the evenings, we have news events that we can trade together, or we can analyze it prior to the news events to look for better trade setups at that point, right? So tonight, Thursday night, we do have a club session as well. So club members, remember, 8 p.m. tonight, GMT plus 8, we do have a club session. Make sure you check out the links in the platform, and then you can join the call tonight as well. So with all that said, quickly now, quick disclaimer, any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of myself, so please remember to do your own analysis prior to entering any trades. Right, so now looking at the news here on Forex Factory, before I look at what could happen today, and we saw some news already from the Aussie employment numbers, but just looking at yesterday, we had the New Zealand RBNZ rates decision. It went from a 1% to a 1.5%, a bit of a surprise. Markets were anticipating 1.25%, a 25 basis points, but it didn't happen. It actually went by 50 basis points towards the upside. What we actually saw at that point, which, just a quick recap, we saw that yesterday already. The Kiwi dollar dropped, but it actually recovered through the day or through the night as well. So the Kiwi dollar has bounced back up from where it dropped from, anticipating now possibly further upside on the Kiwi dollar. What's more interesting is for the pound CPI number year on year was a 6.2, expected a 6.7. We were talking about this yesterday, anticipating pound CPI to be at about a 6.9. I was saying even a 6.9 or 6.7%, came out at 7%, right? Initial reaction, first move, we saw the pound dollar drop quite significantly. I view that as a bit of a priced in scenario. They were all rumored or anticipated that we were going to see inflation to be quite high for the UK. So we actually saw that being priced in. We saw the pound dollar drop. I'll show you the chart here. We saw the pound dollar drop on release of the news at 2 o'clock. But then through the day, it's just gone straight back up above that 1.3 level and also the 1.31 level. So right now, pound dollar on the H4, on the H4 time frame, above that 1.31, possibly looking at further upside into that 1.32 level. So I hope you stayed patient. You waited for the trigger level of 1.3020 before getting into that buying opportunity. You would have made a good 35 pips and possibly even more. We were talking about a possible two trade scenario up towards the 1.31 level. So if you, club members especially, if you manage to jump onto that trade, put it into the chat, put it into the platform, let me know, just so that I know that you're jumping into these trade ideas. So with the pound CPI number at 7%, we're looking at possibly that 1.31 as a good base for further upside. Just a quick review on the pound dollar there. With that as well, later into the night yesterday, we saw the Bank of Canada increase rates. from a 0.5% to 1% by 50 basis points. But this was significantly priced in. They were already talking about this long before this rate decision came around. And what we actually saw here on the Canadian, on the US CAD, was that on release of the news, I'll show you this on H1 first. On release of the news, we saw that big spike up, or the spike down and then a big spike up before continuing towards that 1.25 level. So bear in mind, CAD again at that CAD at that very high interest rate now at 1%, looking at further downside. You know, we were talking about this before. We're looking at a reversal at this 1.2622 level to sell down. If you haven't already jumped into the trade, you know, you would have been missing out on that very good risk reward ratio towards the downside. Now that is broken, that 1.2570 level can possibly look to sell down towards the 1.25 level. So part two of that trade still valid, still looking for that trade opportunity towards the downside if you haven't already jumped into this trade. So that was all that happened last night. Why that big move? Not just the interest rates decision, but also the press conference where they did come out and say that they need higher interest rates and the economy can handle it. So, you know, very aggressive stance coming from the Bank of Canada regarding interest rates decision. Could possibly, you know, it looks like further rate increases is still on the table coming from the Bank of Canada. So with all that said, we saw all the big movements in the Kiwi dollar, in the pound dollar, in the CAD, all strengthening, right? Kiwi dollar strengthening, the CAD, the pound dollar strengthening very significantly, and also the CAD strengthening because of their interest rates decision. What led to that? What resulted from that was we saw some dollar weakness, or we saw dollar weakness being applied across the board as currencies gain strength against the US dollar, right? So I'll show you that on the dollar index shortly. What else we have for today, right? Today we just had the Aussie employment change number, not very flash, not very good, at 17.9K, way below expected and also the previous. And also unemployment rates staying at 4%, not dropping to that 3.9 as most analysts expected. Not a big upset at this point because, you know, you can't expect employment numbers to keep growing and keep going towards the upside. So a little bit of consolidation, a little bit of respite for employment numbers is expected. So we didn't see too big a change in the Aussie dollar because of this news that happened at 9:30 a.m. this morning. What you have to be looking out for today will be the ECB rates decision. They will hold at 0%. Look out for the policy statement. Might have some surprises there coming from the ECB. We spoke about this on Tuesday already, but I think that we might see further upside in the euro dollar coming from this. And also tonight, 8:30 p.m. GMT +8, the ECB press conference. So expect more volatility at that point. Also for club members, again, we will be going through that together during our live session tonight at 8 p.m. Another thing to pay attention to, and I think this is where we will see a quick reverse, is the US retail sales number, core retail sales looking to go from a 0.2% to a 1.1%. Retail sales number looking to go from a 0.3 to a 0.6%. So looking at very good growth in terms of retail sales numbers coming from the US. Retail sales number is an indication of consumer confidence. You know, if consumers are spending, are they buying more things? Are they spending more money? So it gives an indication in consumer confidence in the overall economic performance there. So if we do see that 0.6%, maybe even higher, if we see core retail sales number at 1%, we're likely to see further dollar strength or resumption in dollar strength. Right. So talking about dollar strength, looking at the dollar index here, dollar index on the H4 time frame, We were anticipating it to move towards that 101 level. But if you recall, I was saying that it's not going to be an upward move, a straight line towards the upside. We were looking for it to stop at 100.20, 100.20, and possibly even that 100.40 level, which it did. It climbed towards that point, it hesitated, and we saw that big retrace. This big retrace driven primarily because of the other currencies gaining strength against the US dollar. I don't see that it's got anything to do with changes in the data coming from the US. So I think that this move is because of strength from the other currencies rather than weakness from the US dollar. So given that the dollar index has now come back down towards this 99.65 level, I'm looking for it to find a base at this 99.50. So anticipate slight move towards the downside towards 99.50, find a base here before resuming that upward move again. So looking for that to come down towards this point and then slowly tracking back up towards that 100 level. So, for the short term, look to trade the dollar slightly towards the downside, and then but get ready. Tonight we might see a retail sales number that could push it back up, or into next week we could see some news events or some comments coming from the FOMC to push the dollar back up into that 100 region, into the dollar index into the 100 region again. So what to look out for? Back into the focus for today, looking at the yen pairs, US yen on the H4 time frame here. It hit that 126 level. It hit that 126 level and had a big retrace. This retrace also driven by the dollar index retracing. What I'm looking for, don't enter a trade right now. Hold off on your US yen at this point. Look for it to come down. Look for it to track lower. It would be good if it can come towards that 124.69 level. But I think anywhere from 124.69 to 125 should look to sit there and possibly bounce back up. So what I'll be looking for on the US yen will be buying opportunities at about 125. Let me see. Not going to happen quickly. So about 125 here. So anywhere above 125, first take profit at that 78 or 80 pip take profit level. Stop loss about 35 to 40. You're looking at a 1:2 risk reward ratio towards the upside for the US yen on the H4 time frame. But this means that you would have to be very patient, wait for the US yen to come down, test that support level, look for it to bounce back up before buying towards the upside, towards that 125 or 126 resistance level for the US yen. Patience required here on the US yen. Looking at that, what to look out for on the euro yen. Euro yen is a little bit more straightforward, a little bit less waiting, right? Euro yen has been resisted at this 137 level. You can see that it hit here in 28th of March, turned straight back down. Again, 29th of March came straight back down, came very close on 31st, and then recently 11th of April, and also just now today or early this morning on the 14th of April, it came very close again. What I'm looking for here for the euro yen later tonight with the FOMC, with the ECB's rates decision, press conference and statement, if we do see a hawkish ECB, then we could be looking for buying opportunities towards the upside on the euro yen. Where to look out for, we got next level at 139. So what I would say is look for buying opportunities on the euro yen if it breaks above this 137. So look at about 137.30. Take profit about 150 pips towards the upside. Stop loss, keep it very tight. Maybe at this point, you could even be looking at a 50 pip stop loss, a 1:3 risk reward ratio towards the upside for the euro yen. But if I zoom out here, you can see that the euro yen has been climbing. It has been climbing since the 7th of March. Climb, consolidate, climb, consolidate, climb, a bit of a retrace and consolidate before looking at further upside again. So Euro Yen, a little more straightforward, looking for that trend towards the upside, looking for it to push higher. But it does need to break above this 137 level quite strongly before we can see further upside, because it's been tested several times already. If I moved out to the previous charts, you can see that we're in very high point right now. So I expect a lot of volatility for the Euro Yen at this level. But if it breaks, I think that we can see further upside for that trade. With that, now looking at Pound Yen, I was trading the Pound Yen last night. Very nice to trade. It was just trending towards the upside. What you should be looking for, be very careful on the Pound Yen now, is if I went to the daily time frame, just to zoom out and show you very, very high levels now, right? So you can see that the last time we were above this point was in 2016, where it broke above this level. So be very careful with the Pound Yen, right? Coming back to the H4 time frame. Oops. Coming back to the H4 time frame here, Pound Yen broke above this 163.83 level, and it's gone up, and it looks like it might retrace back down. So what I would be looking for on the Pound Yen, a little bit similar to the US Yen, will be for it to retrace, for it to turn down back towards that 163 level, 163, or maybe even the 163.95 level, before turning back up and buying towards the upside. Pound Yen, I would say that, you know, have a little bit more flexibility on this pair, because if it does retrace quite significantly, then we could see that big turn back down again. This might be because of, again, looking at the pound dollar, if it fails to break any higher and it retraces, then we could see the Pound Yen turn quite significantly towards the downside. This point, be very careful. I would say that you would have both the buying opportunity above 164, immediate take profit, I would say at 165. So you have close to 100 pips, 90 something pips. Stop loss at about 50. So you would have a 1:2 risk reward ratio towards the upside for the Pound Yen. But if it does retrace, then we could be looking at a very big counter trend trade here on the Pound Yen. Below 163.45, below 163.45, you could have a 70 pip stop loss and a 245 pip take profit level towards the downside. A 1:3, 1:3.4 risk reward ratio towards the downside for the Pound Yen on the H4 time frame. So coming for the Pound Yen, coming back down towards that 164.16 support level, we're looking at, you know, both that buying and or selling opportunity for the Pound Yen. And then lucky last, looking at gold. Looking at gold here at that 1975 level. We've been talking about gold tracking a little bit higher towards 1975 or 1970 towards the 1980 level. At this point now, I'm looking for it to retrace slightly, right? To retrace slightly towards that possibly 1960 or 1955 level. But all the way down, look for buying opportunities. I think that it might come as low as 1950 towards this point. So I'm looking at anywhere from here to here, 1965, before bouncing back up again. Look for opportunities to load onto the upside. Look for buying opportunities towards the upside for gold. So I'm looking at that move to bounce back up towards that 1990 level, right? So quite straightforward here in terms of the different currency pairs. I would say be careful. We are seeing a lot of central bankers come out talking about further rate increases, aggressive rate increases. We are seeing the dollar retrace a little bit, but look for that big bounce back up And also remember that, just jumping onto back to this, tomorrow it is Good Friday, so there will be no or very low activity in terms of the trades. So just remember that, don't force your trades tonight and onto tomorrow. We're going to see very quiet markets, especially given that on Monday we're going to see the markets be quiet as well, bank holidays on Monday. So don't expect big movements later tonight all the way to Monday. We'll see markets start resuming the big move onto Tuesday and into the later of the week, with a lot of CPI data to be released next week as well, right? So as we take a break, as the markets take a break tomorrow with the Good Friday and on Monday with Easter Monday, we will not be doing our currency call tomorrow, but I will be back on Monday with the brand new week in terms of currency calls. So no currency call tomorrow, but then we'll resume again on Monday next week. With all that said, take care, trade safe, trade well. I'll see you on Monday. Bye-bye now.